Bitcoin's unique because no amount of capital flowing into a Bitcoin ETF is going to create any more Bitcoin. You know, what we've got is 900 Bitcoin a day. We're going to go to 450 Bitcoin a day. This will be the halving, but it will be the single most consequential halving in the history of Bitcoin, because you're talking about, it's the equivalent of someone coming in the market saying, I'm going to buy $8.5 billion of Bitcoin a year for the next 4 years, guaranteed. That's the demand impact, right? $8.5 billion, $23 million a day at the current price. I'm not surprised they're successful. I expected them to be very successful. I think there's 10 years of pent-up demand. They're the most eagerly anticipated development in Wall Street. This is like Bitcoin coming public. It's like the IPO of Bitcoin, except it's like 10 companies simultaneously taking Bitcoin public, because Bitcoin's a commodity. It's not a security. So the idea that BlackRock and Fidelity and Grayscale and Bitwise and ARK, they're all taking Bitcoin public at the same time is a big deal. The fact that I'm not surprised they're successful as ETFs, because Bitcoin's the apex ETF. The other ETFs are based on oil, like let's say commodity ones, oil, gold, platinum, silver, palladium, market baskets of commodities, natural gas. All of these things are defective as investment assets because physical commodities aren't scarce. Physical commodities can be manufactured in any amount with additional capital and know-how. So ultimately, the best of them is the gold ETF. But if a bunch of money flows into a commodity ETF, that just actually fuels capital into commodity producers. They just dump that commodity on the market, the price gets held down. So commodity ETFs were never that great an idea. On the other hand, comparing these Bitcoin ETFs to the S&P index, the biggest ETF and maybe the biggest development on Wall Street was the launch of the SPDR, SPY, in 1993, about 30 years ago. And the idea that you could create an ETF that represented a market basket of 500 stocks, that was big. And especially that was big because that came along at a point where people had lost faith in the currency as money, as a savings technology. And so they were trying to figure out what is money. And actually an entire generation of people picked the S&P index as money, right? How are you going to store your excess cash for a decade or longer? Not a checking account, not a savings account, not a bond, but the S&P. So the S&P became money, and that ETF became the monetary index. And that's why today, amongst, that's the most successful ETF. If you look at SPY and all the S&P index type ETFs, they have most of the capital in them. But the problem with those ETFs is that stocks also are not conservative. So if I increase the price of the stock by a factor of 10, you're getting more equity. Or if another way to say it is, if I take hundreds of billions of dollars of cash and I buy the ETF, like S&P ETF, the ETF has to buy all 500 stocks pro rata, which means they're going to have to go buy Tesla and Apple and Google and Meta at any price. They're price insensitive, even if they're overpaying. So when they buy it at any price, what they're doing is they're creating more equity because they're encouraging those companies to issue more stock. And then, of course, this is common sense. If the price of your stock doubles, the employees in the company with stock options, they sell the stock, right? They sell the stock option. When they sell the stock option, you put more stock on the market. So the price creates supply. There's a price supply elasticity there. And that's the same as you have with commodities. And it's the same thing with bond funds.
Will the Bitcoin halving spark a huge rally? Bitcoin's fourth halving occurred on April 19th, reducing its inflation rate to just 0.85%, and by altering supply and demand dynamics, the halving has historically led to price surges. And in the dynamic realm of cryptocurrencies, few events command as much attention and potential impact as Bitcoin's halving. And on April 19th, Bitcoin experienced its fourth halving, marking a pivotal moment in its journey. And while past performance does not always predict future results, a closer examination of the halving reveals Bitcoin's resilience and its potential for significant price appreciation. So, what exactly is the Bitcoin halving? Occurring roughly every 4 years, the halving reduces the payouts awarded for miners for solving blocks, a process known as proof of work, as this is a primary means for new bitcoins to enter circulation. The cut to miner rewards effectively slashes Bitcoin's inflation rate. And with the fourth halving now passed, Bitcoin's inflation rate stands at a measly 0.85%, making it less inflationary than gold. And the process of reducing its inflation rate will continue until 2140, when the last Bitcoin is scheduled to be mined, and underpins its robust monetary policy, which prioritizes scarcity and finiteness. So here's what we need to understand about the effects of halving. Since the halvings cut Bitcoin's inflation rate, they effectively change the dynamics around its supply and demand. And as a result, even if demand stays constant, then the price has to increase to offset the supply reduction. Essentially, halving exerts upward price appreciation in Bitcoin. And we can see this when analyzing Bitcoin's past performance after a halving. In the years a halving occurs, Bitcoin usually returns about 125% on average. And if this trend holds, then that would put its price at $100,000 if measuring from the beginning of 2024. And what's even better is as the effects of the halving solidifies, it is in the years following a halving that the best gains typically arise. And in those years, Bitcoin grew up by nearly 400% on average.
Have capital flows into all those other asset classes, you create supply of that asset. They're not scarce. Bitcoin's unique because no amount of capital flowing into a Bitcoin ETF is going to create any more Bitcoin. You know, what we've got is 900 Bitcoin a day. We're going to go to 450 Bitcoin a day. This will be the halving, but it will be the single most consequential halving in the history of Bitcoin, because you're talking about, it's the equivalent of someone coming in the market saying, I'm going to buy $8.5 billion of Bitcoin a year for the next 4 years, guaranteed. That's the demand impact, right? $8.5 billion, $23 million a day at the current price. Now, that's a huge amount, but more importantly, that's a huge demand-supply shift in the year when the demand via the ETFs has jumped by a factor of 4 to 10 times the daily supply. So what you have is institutional capital entering, and then you have the supply getting cut in half. The approval of the ETFs was a pretty concrete endorsement of Bitcoin as an asset class by the regulators. And anybody who's thinking about banning Bitcoin or not approving Bitcoin ETFs, they're now out of consensus. So it really flipped the global consensus from, well, maybe it's too good to be true, maybe it'll be banned, maybe it won't be banned. The approval of those ETFs meant that it doesn't matter who wins the 24 elections. It's taken the future of Bitcoin out of the hands of the president. It's taken it out of the hands of the next head of the SEC. It's taken it out of the hands of most regulators in the world. We pretty much opened Pandora's box across the Rubicon. It's very concrete at this point. And it was uncertain, right, before. And so that's a very big piece of regulatory clarity. What happened next is it's created a positive dynamic where now I think you're seeing pressure to approve ETFs in other places in Asia. You'll probably see Hong Kong spot ETFs. You'll probably see them get approved in any country where people are on the fence. It also created a fee war. It used to be that you paid 2.5%, to hold your money in Grayscale. And all of a sudden now you're paying 1.5% at Grayscale, but you're paying 25 basis points.
And if this halving follows a similar pattern, then Bitcoin could see its price reach somewhere around $500,000 in 2025. And while the halving alone can introduce profound impacts on Bitcoin's price, there are a few other developments that could make this halving unlike any other. A further exploration of the current landscape should help you see that these potential price targets are not as sensational as they may seem. And first, it's crucial to understand that while the halving alters Bitcoin's production, this halving is unique in that there was an existing supply shock. For the first time ever, there were less coins available on exchanges during this halving than the previous one. And since hitting a peak in May 2020, the total number of coins available on the exchanges has plummeted, sitting at roughly 2.2 million today. These are the lowest levels seen since 2018. And then we have the arrival of spot Bitcoin ETFs. And in Jan, the SEC approved 11 spot Bitcoin ETFs, effectively opening the doors for a new set of buyers to enter the Bitcoin market. And for individuals unfamiliar or lacking the technical knowledge required to navigate cryptocurrency exchanges, these ETFs provide a familiar and regulated avenue to gain exposure through traditional brokerages. Now, investors can add Bitcoin exposure to their 401k plans or IRAs, effectively lowering the barriers to entry for a broad range of investors. This should really help increase the demand for Bitcoin and increase its price. While it's still early, we can just see how popular the ETFs have been. In mid-Feb, the 11 ETFs were collectively purchasing at a rate 10 times greater than Bitcoin's daily production, which is roughly 900 Bitcoins. And although the initial buying frenzy has cooled down, if the buying were to reach these levels again, that would mean that the ETFs would be buying at 20 times the daily production rate now that the halving has passed, putting even greater pressure on Bitcoin's price to go up. Only time will tell just how explosive this halving cycle will be for Bitcoin, but with a quick assessment of the implications that every halving brings, as well as the other contributing factors like an existing supply shock and the introduction of ETFs, there's reason for considerable optimism. Even with Bitcoin's price hovering near $66,000 today, as the effects of the halving materialize over the coming months, I'm still buying Bitcoin in the anticipation of what's to come. So that's it guys from here today. Thank you so much for watching and please hit the like button.